Traditional wealth management has not changed much in the last 50 years or so. Most wealth advisors don't have a holistic view of entrepreneurship. They maybe know family planning, but they don't really know the demands and the needs of entrepreneurs, CEOs, especially when it comes to building legacy and wealth and helping them, not just with their personal finances, but with their businesses. So I thought on this podcast, we talk a little bit about why traditional wealth management is dead or dying and what's replacing it, what the future of wealth management can be and should be. Mr. Jeff.Sokol, you have plenty of experience in this arena. What are you seeing right now in the market? What do you see are the areas that need to be changed?
Well, first of all, I want to say good riddance when we talk about the traditional wealth management being a dying industry. Good. The consumer's gotten smarter. They need more. They want more. They don't like the idea that they're paying somebody a very high premium fee. They get a phone call once or twice a year, and then not much help on the taxes, not much help with succession planning or estate planning, not much in the way of lifestyle or all these other things that you should be taking into account when you think about somebody's health and wellness and well-being. It's more than just being able to pick and plug into an investment strategy. So the consumer is asking for that, and there are a lot of really great advisory individuals and wealth advisors in the industry that are emerging, that are starting to do this. The consumer's noticing, and you can see the trends that some of these larger asset management firms are not keeping up with the times, and people are voting with their wallet. They can bring their assets elsewhere, and that's what we're starting to see.
And the business owner is somewhat of a unique case.
Yeah.
They treat money a little differently than the average person who, let's say, is a W-2 and been working at the job for the last 30 years, like a school teacher who puts away into 401k. The business owner is constantly dealing with cash flow, and they may not be as disciplined when it comes to them putting away or even having the insurances that they need. How should a business owner start to think about wealth management if they were talking to, let's say, two different wealth managers? One is the classic traditional old school, I'm just going to call you once or twice a year, and the other is this new idea, this new vision of a wealth manager. What should they be looking for?
So I have experience as an old school wealth advisor back in my Morgan Stanley days, pre-GrowthInc, which was 20 plus years ago. And that's exactly what the approach was. And I think half my client base had businesses. And so that was our target focus. Back then, it was almost a bifurcated conversation. What are you doing personally? And then what are you doing with your business? And I think over time, those two conversations have merged. And so I think now some of these entrepreneurs now are a bit more sophisticated with the tools out there. They're informed, and they're thinking about that personal wealth journey and relationship with money alongside their business. And so oftentimes, though, you need to run a business. You need to look at the bottom line, and their mindset is operational day-to-day focus, making money, and maybe building legacy, growing the business, whatever that might be. And the ability for them to see, okay, how do I unlock this at some point over time? And that is now the mindset where my business is actually an asset. Right. And so how do I manage that kind of combined approach, my personal side, the business side, and be able to think about that holistically? And that to me is what's changed. And they know that, and so being able to serve that whole person alongside the business with the same type of approach, I think, is critical and what they're looking for.
So what is GrowthInc's approach towards this?
We have a point of view that the current world is complex, it's complicated. There's everyone is vying for your attention and your timeshare. It's very difficult to say no to people that are prospecting you with interesting ideas. It's hard to sift through it all. It's hard to find that diamond in the rough. And what will be the result of that is things fall through the cracks. You don't get quite as buttoned up as you ought to be. Something comes up that you had the wrong insurance policy, or you overpaid on your taxes. These little things that start to add up over time that are going to show up on the bottom line, in addition to taking up just tons and tons of your time. So the solution here is if you have a one-stop shop, someone that can provide certain levels of strategic consulting and management consulting for your business, as well as what you ought to be doing with your investment portfolio, things you can do to make sure your spouse is optimized, that your children have target accumulation date funds for their university studies. all these different things that are all critical needs that are all urgent in their own way. It's all being handled by the same person, by the same location. So you don't have to end up having 10 different meetings with one with an accountant, one with a lawyer, one with your consultant, one with this, one with that. You have a one-stop shop that can take care of everything. It gives you a lot of your time back. You feel a sense of freedom and security. You have a new level of optimism about how you're going to be able to own and operate your business. And when you just get yourself firing on all cylinders, you see it. You start performing better, you feel healthier, you feel wealthier, you feel happier, and from there, anything's possible.
What is the additional benefit of having an advisor that understands business? And business, in many cases, is the large driver of their wealth. This is where they're siphoning, unless they own multiple businesses, but in most cases, our clients have their single business, and that business is what's generating their wealth. And if they're lucky, they're going to run the same for the next 20, 30 years and then try to sell it.
I would answer it this way, that I think historically, when you think about investments and building wealth, personally, you don't have a lot of control over what you're investing in. However, if you're a business owner and you're operating day to day that asset, you have the ability to drive and control growth, therefore maximizing value and building that value of an asset over time. And I think that's the big difference and key here, where at some point you unlock those assets where you've had the ability over time to put in the work, put in the energy, and you kind of understand what the outcome might look like and plan toward that, versus saying, I'm investing in this and let's see how it goes. That's the difference.
Yeah, because that's a lot of times the case. I mean, you're blindfolded and shooting in the dark and just hoping something's working.
Right.
Or you're just putting your money in the S&P and hoping to get you to 10%. As a business owner, you're like, I could do 10 times better than that. Well, you can also lose it all as well. So I think it's important to have the sobriety of a wealth advisor, the sharpness of a management consultant, and putting those two pieces together, and maybe more pieces on top of that, that starts to look at the whole person to really maximize your overall wealth, your complete net worth, versus just managing a stock portfolio.
Indeed. And on the business side and others, it requires active management. It requires effort. It requires a plan. And that's exactly what we try to set you up to do. And then along the way, help facilitate those key events and make sure that plan comes to fruition. And so, as Jeff said, building that vertically integrated platform, the one-stop shop, is exactly our philosophy here. And given our experience working with high net worth entrepreneurs and going through seeing their struggles, business growth, and ultimately investment banking to facilitate those transactions, we're in a really good position to add value.
What about exit planning? Succession planning and exit planning. It starts to account for different levels of risk, and people start saving differently and socking away a little bit some of that money. There's tax implications of that, but I know in many cases when an owner's about ready to sell, if they've been paying themselves, let's say $300,000, $400,000, $500,000 a year, and then they sell, they're concerned now that, hey, that goes away. I'm just going to get one lump sum, but should I just hold on to this for another 10 years and just, right? And we're always saying, well, there's a lot of risk in that too. But what's your take on just that conversation of like, and your paycheck is going to end, so you want to make sure this last payout is a big one.
Like with anything, if you're attempting to sell your company or planning to do so, the goal is to maximize value. Again, you might run your business for a variety of reasons: family, succession, legacy, lifestyle. But ultimately, there's always a number. And to your point specifically, that is your nest egg. And so you need to be able to maximize.
Do you feel sometimes business owners are maybe a little too optimistic on what they could produce revenue-wise, and therefore do not put away as much as they should, or take advantage of the strategies that you might recommend?
That's a great point. Business owners have very developed skill sets, particularly in their industry. That's how they've been able to do something so miraculous and build a great business. It's a different set of skills, a different ethos, a different philosophy in wealth management. There's a competitive streak to most business owners and operators. They feel like they can do more. What I always think about with business owners, you're looking on a week over week or month over month or quarter over quarter basis. You're trying to drive certain revenues by specific dates. It can be tempting to do the same thing with how you build a portfolio. You want to achieve, by the end of this week, you have a target. You want to get 1 or 2% higher. And when you start thinking with a narrow or a shorter time frame, you can miss the big picture in the long term. One thing I like to highlight is if you have a long enough time horizon, and really anybody should, not, this is not to be morbid, but not about your own life, but we plan generations in advance. So everyone, in theory, has centuries of time to work with. If you're getting 2% less compound annual growth rate over 40 years, it's less than half what your assets would be worth. So you really do need to split hairs from that perspective, that you want to outperform, you want to be fee sensitive, but you don't want to get so caught up in the immediate or the shorter timeframes that you might do with a business. With your investment portfolio and how you manage your assets, you can take a much more patient, measured approach. And I think that's a bit of something to adjust to or to adapt to, that a business owner doesn't quite have that same outlook.
What would you say to a business owner that says, I don't need an advisor, I don't need an investment banker, a management consultant, I think I could do this on my own?
Well, you might be able to, but do you have enough time in the day? Right. And also the expertise and experience needed to navigate some of those waters. I think most entrepreneurs we work with are operating small, successful companies. They are spending 60, 80, 100 hours a week to make sure those businesses are performing and optimized. And so to then try to be able to manage all these other aspects of your financial picture, I think, is extremely challenging. And so the idea is you're going to get more value if you're working in each area with a specific expert. I truly believe that. So you're your expert. You're the expert of your business. Right. Have you sold your business? No. Have you ever gone down that path? Right. Have you managed your own money? If you are accused of a crime, are you going to go represent yourself in court? Right. If you need you could. Exactly. If you need a medical procedure, are you going to go operate on yourself? Right. It's kind of the analogy here. And so I think it's so important. Again, I believe that entrepreneur's business is his core asset, his or her core asset for the future. And to be able to maximize that, it requires constant focus, time, and effort. And not really, the inability to be able to manage the other things, I think, is a huge distraction.
On that same point, I'll talk to people sometimes, it could be a cocktail party or whatever it is. They say, I don't need an advisor. I got into Apple and Microsoft and NVIDIA decades ago. I know how to pick them. I know how to hold them. My portfolio's up. And I'll just ask them a simple question. Okay, what vehicle, where is that invested? They say, it's in my brokerage account. Okay, well, all you had to do was open up a solo 401k for yourself, or invest through a health savings account, or a tax-sheltered vehicle where if someone has $1 million worth of NVIDIA in a taxable brokerage, you realize that gain, you're looking at 40-50% rate, your take home is only $500,000-$600,000. So if you have only $700,000 of NVIDIA in a tax-sheltered vehicle, you have all $700,000 of it. So you might know that you can do certain things really well, but it's just that little thing, that intricate detail, that level of nuance, where if we start getting sophisticated about how we structure things, we can also avoid taxes. And when you see that number at the end of the day, it's a bigger pot of gold at the end of the rainbow if you really know how to get into the weeds and into those details.
And it's all connected, right? It's all interlinked. Your real estate holdings, your home, your vacation home, your
completely. Business,
all of it, your portfolio, your insurance policies. Then it starts to bleed into your family. There's the great wealth transfer is occurring. Mm-hmm. So plenty of people are going to be absorbing more assets, absorbing businesses that they may not even know what to do with. I mean, that's a topic we should touch upon for sharing as well.
Again, I think the new aged approach and the way we think about it is no one's looking at the whole person, that whole picture of things you just listed. Everything's kind of operated in silos, and so, and those advisors, by the way, and those professionals aren't necessarily talking to one another. So you got to vertically align this thing and look at the whole picture and understand where you are today and where you want to go. And again, driven by the key and core asset of that business, it's extremely valuable. Yeah. You're going to be missing something to what Jeff is talking about in terms of tax or risk mitigation somewhere. And it's worthwhile just to start thinking about this holistically and plan for the future.
So as a final call to action to any business owner that's considering bringing on a wealth advisor and an investment banker when the time comes to sell, and a management consultant, and. What would your call to action be to this individual?
Pick up the phone. I always leave my phone number when we do these. You really have nothing to lose by giving us a call. Let's spend 10 or 15 minutes. Let's just chat about it. You know, we're not going to start giving high-level investment advice right there on the phone, but there's a lot of things we can identify because we've worked with folks like you know, plenty of times for many years. We'll probably pick up on something. We'll notice something where we can optimize, and then, you know, that might give you some more breathing room, or it might fill you with a little higher sense of confidence that you do want to take it another step further, and we can meet again. But yes, pick up the phone, give us a call. Let's chat about what's going on with you, your family, your business, what goals you have, how you're putting your money to work for you currently, what you're doing to protect against risk. You know, these are good conversations to have. You really have nothing to lose by at least having this conversation, and then let's see where we can go from there.